At 6:43, life is getting more expensive, and that's why we spend every morning asking where's the money to help you save and plan your finances. Financial experts say they're seeing a trend among homeowners.
New data from a credit scoring company, VantageScore, shows mortgage delinquencies are on the rise. It's a signal that some households may be feeling increased financial strain. And our Marcella Robertson joins us now in studio with the details on this. Good morning.
Yeah, good morning, guys. This is tough. Certainly not a situation you want to find yourself in if you are a homeowner. Mortgages that are more than 90 days past due rose nearly 19% last December, up from the year before. Some context, though. The number of mortgages at that delinquent stage, it is still very, very small, but this does signal a big issue. These numbers have typically been low, and they are certainly nowhere near what they were during the 2010 financial crisis, but financial experts say it is still concerning. Even with that 19% jump, mortgages at that stage of non-payment, again, as I mentioned, remained low, about 0.2%. But from housing to groceries to car payments, experts say many Americans are feeling tapped out right now, and they are concerned about the fast pace of this delinquency growth.
The fact that they're starting to tick up a little bit just shows some of that spillover effect, that more people have more credit card debt. They're paying more for cars and other things in their lives. So we're starting to see a little bit of distress. It just goes to show that the cumulative effects can be very significant because, even though the inflation rate has come down a lot, that doesn't mean prices have come down.
Right now, mortgage delinquency is worse among lower income households where home values are falling. And guys, while this is, again, not a widespread concern right now, experts are still paying close attention to this because it is happening to some people. Again, not widespread, but some people are facing some tough times.
Right. So how do people avoid being in this situation in the first place?
I think it really signals to, number one, how important that savings is. We always talk about that buffer, at least 3 months saved so that you have something to draw from and pull into when you find yourself in a situation like this. The other thing is, if you're not ready to buy a home, don't do it. And to avoid this from the jump, because lenders are always going to give you more money than what you can really afford. And just because they give that to you doesn't mean that you actually have to take it. So just kind of avoiding that from the beginning is probably your best bet, because once you're in that situation and are not able to pay, it gets really messy.
I wanted to, something very important you noted, if it feels like it's hard to get ahead, it is. I mean, the systemic gaps right now, especially in the income gaps that we're seeing, it's playing out in the numbers you're talking about, where the rich get richer and the poor suffer more. And it's literally playing out with the mortgage rates. And so how to protect yourself, all the information you provided was so important.
Yeah.
All right, Marcella, thank you.
We have more ways to save. WUSA9.com. Just text word money, 202-895-5599. We'll send it straight to your phone.